Good morning. My name is Audrey Strauss. I am a United States Attorney for the Southern District of New York. Today, we announce charges against Trevor Milton, former CEO and Executive Chair of Nikola Corporation. We charge that Milton engaged in a scheme to enrich himself by making false and misleading statements to retail investors about the development of products and technology at Nikola Corporation. Nikola is a green vehicle company that Milton founded. As we allege, in order to drive investor demand for Nikola stock, Milton lied about nearly every aspect of the business. For example, Milton claimed that the Nikola One, which is portrayed here, one of the early prototypes in Nikola's business, could be driven, when in fact the closest it ever came to driving was when a group of Nikola engineers took it to the top of the hill and rolled it down so it could be filmed for a commercial. He even claimed that Nikola was developing the technology for a new pickup truck, which he called the Badger. But in fact, the Badger was nothing more than another company's truck that was dressed up with Nikola branding. Milton also claimed that Nikola had developed technology and parts when in fact those items had been developed by outside suppliers and other automakers. Milton claimed that Nikola was producing hydrogen when in fact it was not. And Milton claimed that the company had binding orders for semi-trucks that represented billions of dollars in revenue, when in fact most of those reservations could be canceled at any time or for a truck that Nikola did not plan to produce in the near term and has not produced to this day. Today's criminal charges against Milton are where the rubber meets the road. Now Milton will have to answer in a court of law for his allegedly false and misleading statements. Milton was taken into custody early this morning in Manhattan and will be presented this afternoon before Magistrate Judge Sarah Netburn in the Southern District of New York. As we allege in the indictment, Milton founded Nikola in 2015 and took the company public through a merger with a special purpose acquisition company, or SPAC, in June 2020. A SPAC is a publicly traded company with no business of its own that can be merged with a private company so that the private company can become publicly traded. The conduct we allege occurred between November 2019, when Milton took steps to take Nikola public, and September 2020, when Milton resigned. During that period, Milton brazenly and repeatedly made false and misleading claims about the status of Nikola's technology. He made those claims on Twitter, Instagram, on podcasts, and on TV. Retail investors were listening to Milton. His statements helped convince them to buy Nikola stock. But what they heard him say was not true. At the bottom, this is a very straightforward case. Milton told lies to generate popular demand for Nikola stock, beginning at least in or about March 2020, when Nikola announced that its stock would become publicly listed. Milton became increasingly preoccupied with keeping Nikola's stock price high. So let me give you some more details about the lies that Milton told. First, as I've already briefly mentioned, Milton falsely claimed that Nikola had early success in creating a, quote, fully functioning, unquote, semi-truck prototype named the Nikola One. In fact, as Milton knew, when he unveiled the prototype to the world, it was unfinished and untested and missing critical parts. It didn't have gears, motors, or a control system. Even the infotainment system that Milton said was finished was just really tablets with prototype mock-ups. Later, Milton tweeted a video where the truck appeared to be driving. but actually it was brought to the top of a hill and just allowed to roll down. Second, Milton claimed that Nikola had engineered and built an electric and hydrogen-powered pickup truck named the Badger from the ground up, using Nikola's parts and technology. In fact, when Milton made those claims, no such truck had been completed, and the prototypes that Nikola was developing were being constructed not from the ground up by Nikola, but from the bodies of Ford F-150s that Nikola had purchased. Third, Milton falsely touted Nikola's hydrogen production business, making misleading claims that Nikola was producing hydrogen and had reduced the cost of doing so. In fact, as Milton knew, Nikola was producing no hydrogen at all at any cost. Fourth, Milton claimed falsely that Nikola had developed batteries and other important components in-house. In fact, as he well knew, Nikola was acquiring those parts from third parties. Fifth, Milton falsely claimed that reservations for the future delivery of Nikola's semi-trucks were binding orders representing billions of dollars in revenue. As Milton specifically claimed, quote, "These are sign on the dotted line billions and billions and billions of dollars in orders." In reality, as Milton well knew, the vast majority of those orders could be canceled at any time and were for a truck Nikola did not plan to produce in the near future. At all times relevant to the indictment, Nikola was a pre-revenue company and had yet to sell any vehicles or make a production-ready version of any of its products. In carrying out his fraudulent scheme, Milton exploited features of the SPAC structure that are different from a traditional initial public offering or IPO. Unlike a traditional IPO, when a company is taken public through a SPAC, its executives are not subject to a quiet period, during which they are prohibited by law from disclosing facts about the company that are not contained in the company's SEC filings. Milton himself explained on a podcast that the advantage of a SPAC was that he could, quote, "communicate with the market," unquote. Milton wanted to be, in his words, in control, and didn't want bankers trying to tell people what his company was like. As alleged, Milton exploited this feature of the SPAC for his own benefit and to the detriment of non-institutional investors who bought Nikola's stock based on his false and misleading claims about the company. Milton's lies were instrumental in driving retail investors to eagerly buy up Nikola's stock. Some of these investors were people who had no prior experience in the stock market, and had begun trading during the COVID-19 pandemic to replace lost income or to supplement it. In the meantime, some of the early institutional investors in the SPAC, who had access to more information regarding Nikola's products and technology, were selling their Nikola stock. As alleged, Milton was able to take advantage of the fact that the retail investors who purchased Nikola's stock did not have access to all the information that the strategic institutional investors had. And while Milton was using lies to drive demand among retail investors for Nikola's stock, the value of Milton's personal stock holdings grew and grew. Between March 2020 and June 2020, when Nikola's stock hit its peak, the market value of Nikola's stock that Milton personally owned increased over $7 billion. But before Milton could cash out, he hit a roadblock. In September 2020, the market learned about some of Milton's false claims. Milton resigned in response, and in the days following Milton's resignation, the price of Nikola's stock dropped more than 40%. As a result, investors, including thousands of retail investors who were the targets of Milton's fraudulent scheme, suffered substantial losses. In some cases, their losses amount to tens or hundreds of thousands of dollars, compromising their financial security or their retirement savings. Now Milton stands charged for his role in the scheme, and he will have to answer for his allegedly false and misleading statements in court. A case of this type requires close collaboration and coordination with our law enforcement partners, and their representatives are standing up here with me today. I am joined today by our partner in so many important cases, the U.S. Postal Inspection Service, and my friend who leads it, Philip R. Bartlett. I want to thank Inspector in Charge Bartlett and his team for their great work and assistance in this investigation. Thank you. I am also joined by Gurbir Graywall, the Director of the SEC's Division of Enforcement. I want to thank him and the SEC for their hard work on this matter. And last, I want to acknowledge and thank the career prosecutors from my office handling this case: Jordan Estes, Matt Podolsky, Nick Rose, and their supervisors, Damian Williams, Andrea Griswold, Scott Hartman, the chiefs of the Office's Securities and Commodities Fraud Task Force. Thank you all. And I want to say to anyone watching this or who hears about this investigation, if you believe you are a victim of Trevor Milton's scheme or have information about the conduct in the indictment unsealed today, please let us know. You can reach my office by sending an email to USANYS, it's on the visual right here in the front, @NikolaVictims@USDOJ.gov. I'll say that again, USANYS.NikolaVictims@USDOJ.gov. And I would now like to invite Inspector in Charge Bartlett to the podium.
Go. All right, good morning. I want to begin by saying I've been in law enforcement for 33 years, and over the years I've come to learn that there's three characteristics of fraudsters. They're liars, they're frauds, and they're cheats. In this case, a fraud was committed where the defendant allegedly misled the progress and viability of certain hydrogen and battery-powered trucks. As alleged in the indictment, he lied to investors and lured them into believing the company had already developed viable prototypes that were ready to be produced. Thousands of investors relied on this false information to purchase company stock. During the days following Milton's resignation from Nikola, the company lost approximately 40% of its value, and individual investors were cheated out of hundreds of thousands of dollars. I'd like to thank the United States Attorney's Office and the SEC. They've always been great partners, and we all worked hard on this particular case. And briefly, I just want to close with 3 tips, prevention tips for consumers. Do your research and independently verify claims. Never invest solely in what you read in a newsletter or you hear from a friend or a fast-talking salesman. Watch out for once-in-a-lifetime, high-pressure, must-act-now offers, and trust your gut and verify the details before you engage in any type of investment. If it doesn't feel right, it's probably a scam. Thank you.
Now I'd like to invite the SEC's Enforcement Director, Graywall, to the podium.
Thank you, U.S. Attorney Strauss. Good morning, everyone. I'm Gurbir Graywall, the Director of the SEC's Division of Enforcement. Today, in a parallel civil complaint, the SEC also filed charges against Trevor Milton, the founder, former CEO, and former executive chairman of Nikola Corporation. We allege in our complaint that Milton repeatedly disseminated false and misleading information, typically by speaking directly to investors through social media about Nikola's products, about its technological accomplishments. My law enforcement colleagues have already laid out the alleged facts of this scheme, so I won't repeat what's already been said. Instead, let me focus on what this case highlights. This case is about the obligation of corporate officers like Milton to provide complete, truthful, and accurate information at all times when discussing their company's affairs. There is no end around or exception to this obligation. It applies to all public companies, even those that have only recently entered the public markets, including through SPAC transactions. This case also demonstrates that corporate officers cannot say whatever they want on social media without regard for the federal securities laws. We will hold all those who make materially false and misleading statements accountable, regardless of the communication channels they choose to use. Indeed, as alleged in our complaint, Milton violated the federal securities laws when he used his extensive social media platform to repeatedly mislead investors about Nikola's technological advancements, its products, its in-house production capabilities, its commercial achievements, and as a result, ultimately reaped tens of millions of dollars of personal benefits as a result of this misconduct. This matter also represents yet another example of the Division of Enforcement's efforts to deter misconduct in the SPAC market, and it demonstrates our commitment to holding individuals, not just corporate actors, accountable for misleading investors when attempting to improperly capitalize on popular investment vehicles. Finally, this case is another example of our longstanding and productive working relationships with the United States Attorney's Office for the Southern District of New York and the U.S. Postal Inspection Service. In this case, the SEC staff brought to bear all of our investigative skills in partnership with our colleagues, in particular our skills in marshaling and analyzing extensive social media posts and quickly learning the intricacies of developing technologies. I'd like to recognize the Division of Enforcement for their hard work. Our team has done incredible work. This is my first week on the job, and I am already impressed by the work that this team did and others across the division do on a daily basis. Rebecca Fike, Sarah Mallett, Ty Martinez investigated this matter under the supervision of Scott Massanica and Eric Werner, who are here this morning, all from the SEC's Fort Worth Regional Office. Each of these individuals will continue to be involved in this ongoing investigation. Nikolai Vidashenko and Keith Bernstein will lead the litigation against Milton under David Frazier's supervision. Again, I want to thank the many law enforcement colleagues involved in this matter. In particular, thanks to U.S. Attorney Strauss and the members of her Securities and Commodities Fraud Task Force, Philip Bartlett and his team at the New York Division of the U.S. Postal Inspection Service. And with that, I'll turn it back to the U.S. Attorney. Thank you.
Hi, Audrey.
Hi.
In your indictment and in your comments today, you speak a significant amount of information about SPACs. And do you, no pun intended, look at this as a vehicle for potential fraud? And should we see more investigations from your office on these SPAC-related investments?
The indictment does identify the fact that there was no quiet period as something that was used by Milton as a way that he could get out and start talking to the market and try to stimulate interest in the stock, which could not be done if it had been done as a traditional IPO. So that's in the indictment. Beyond that, I can't comment on SPACs in general, but just to say that we identified in this case something that about the SPAC regulatory structure that allowed him to do some of the things he did that we are alleging to be criminal.
A quick follow-up, you also speak about how some of the investors that invested in this company's stock were people who were out of work because of the pandemic or were using money that they may have received from the pandemic. Do you have any other investigations or have you seen any other complaints to your office about people who also invested in other potential companies or securities that were in a similar position?
Yeah, that would go beyond the scope of the indictment, and so I can't comment on anything beyond what we alleged in this case. And we did allege that people were trading in this SPAC at a time when they were not working or had other things on their mind.
Along the lines of that last question, with the stock market constantly hitting new highs, people allowed to trade with no commissions, all kind of new investors in the market.
Yep.
Is either the SEC or the prosecutor's office increasing its enforcement in this area of looking at companies that are misleading the public?
We are always looking at that, and we are always ready, willing, and able to aggressively pursue an investigation where we see that investors are being misled, and I'm sure my colleagues over here would say the same thing. this is always on our mind. It's not new.
Sure, thanks a lot. I just want, I think it's the civil complaint by the SEC quotes Milton as saying that he was targeting what he called Robin Hood investors. And since that's it's another, I guess, enforcement action, I mean, it's related to these other questions, but do you think that there are particular stock trading, mechanisms that make, investors vulnerable to this, and what steps are going to be taken about it?
Since it relates to your complaint,
I'll echo what the U.S. Attorney said a moment ago, that we will root out fraud wherever we find it, regardless of the methods used or mechanisms used. That's our role. That's what we do, and that's what we did in this case.
Last question. Just wondering if Mr. Milton made any statements to board members, executives, or other investors that he knew that these statements were false or that the technology didn't work?
that will be left for our evidence in court. Whatever we have in the indictment does not deal with that directly, so I can't comment.
One more question for Tal.
Just one more question for Mr. Greenwald, if possible. You referenced people, CEOs making statements on social media, making statements about their products. The SEC, prior to you being in your current position, came to a settlement with Elon Musk, another player in this space, who's made a number of statements, some of which have been provably false on Twitter. Are you going to take a second look at Mr. Musk's statements under this administration, or is that somebody that you're following closely?
So I'm not going to speak beyond the allegations in our complaint, and as I said in my remarks, that regardless of the methods used by corporate officials, we will hold them accountable for materially false statements that they make, and especially in cases where investors are hurt, as alleged here.